Should I invest in real estate right now? It's a question I get very often. If we haven't met before, my name is Garrett Lynch. I'm the host of the Financial Freedom with Real Estate Investing podcast. And through my investment company, Nighthawk Equity, my partners and I own $350 million in real estate. I've been investing in real estate since 2011. And since then, I've seen it all. I've seen booms, crashes, high interest rates, low interest rates, everything you can possibly imagine. So if you're wondering whether to start investing or wait, then this is the video for you. Before we begin, please note that there are two main ways to invest in real estate. There's actively, where you buy your own properties, and then there's passively, where you invest in other people's deals. I made content before in this topic, but in this video, I'm going to be focusing on passive investments. Passive investing is best for high income earners who are busy. If you're working in a demanding field like medicine, finance, technology, then you're probably working like 50, 60 plus hours a week. And if that's you, then you're spending another 10 to 20 hours per week trying to acquire real estate deals, oversee construction, and handle tenants. It's probably not the best idea to go that route if you don't have the time. People who want to grow their career or business is the second one. So if you own a business, you have a high paying job with career growth, you'll likely make more money by focusing on growing your business or getting promoted and investing your money in real estate passively versus really trying to be a part-time active real estate investor. So in other words, if you're focused on growing your active income, like scaling your business or getting promoted, then passive investing is likely a better fit. The other group is people that want to park capital. So many people believe the myth is owning rental properties or owning real estate in general is completely just passive income where you sit back and collect mailbox money every month, but then they buy them. And the reality is that real estate investing is a business just like anything else. And there are a lot of headaches involved. It doesn't matter how passive you try to make it. Even in my position, we have a lot of layers. Things are not that passive at all. Things bubble up. Passive investing is also for people who just don't like real estate. And this one's pretty straightforward. If you don't like going to properties, managing different team members or real estate in general, then you shouldn't own your own properties. So a quick note, if you fit one of these four categories and you'd like to learn more about the latest passive investment that we have right now, head to nighthawkequity.com/Waverly or click the invest now button and you'll see the deal room and you'll be able to check out our latest investment. With that being said, let's get into the central theme of this video. Should I invest in real estate in 2025? And my answer to your question is another question. Why are you trying to time the market? The biggest mistake I see newer investors make is that they try to time the market. The result is that they delay getting started. There's never a perfect time to get into the market, and therefore you'll wait forever. So let me give you an example of why trying to time the market is a mistake. From 2015 to 2020, people complained that they couldn't find good deals because the market was hot. It was very competitive. Oftentimes you had to make non-refundable deposits to get a deal, and it was challenging, but the smart investors were still doing deals because they learned how to get off-market deals like we talked about earlier. Uneducated investors never got into the game and missed out on the massive run-up in values over the next 2 years. Then in early 2020, when COVID hit, and you all know what happened then, the world stopped, including real estate. No one was buying anything for a short period of time. Experts predicted that tenants would stop paying their rent. Blood was in the streets. There was fear. New investors were waiting. But then a surprising thing happened. Collections started going up. Rents started going up. While new investors waited for things to die down or quiet down, we picked up some of our best deals during that time and sold it for massive profits within that time frame. So very quickly, the market swung from fear to greed. And by early 2021, the market was back to hyper-competitive and non-refundable deposits. Again, new investors said that they would wait until the market normalized, so they waited, and you could easily get into deals and flip in and out of them and make money in that environment. Market went up even higher. By the summer of 2021, inflation was suddenly at 9%. While this was bad for the average consumer, rents skyrocketed by 25% over the next 18 months, massively increasing valuations. The new investors that waited in 2019 because the market was hot, who waited during COVID and waited in 2021 because the market was hot, missed out on huge increases in valuations. But right now is a similar time. There's fear out there. We peaked out in March of 2022. There's lots of bad stuff in the news about loans coming due. and defaults. The new investor stays on the sidelines because they don't understand what's going on. Even existing investors are on the sidelines because they're getting burned from the peak of the market. But that's when Warren Buffett buys. Buffett buys when no one else is buying, and he buys companies with strong fundamentals that are temporarily undervalued. That's what's happening in the multifamily space right now. While the new investor is waiting, the smart investor digs a little deeper and finds out that distress is actually a buying opportunity. It's an opportunity to buy at a discount, not only at a discount, but with lower leverage and therefore lower risk. The best part is that there are strong fundamentals in multifamily housing, the multifamily housing market in general. Across the nation, there's a clear trend emerging. With the cost of buying a house higher than ever, more people are choosing to rent. This means the demand for affordable housing is higher than ever, all while the cost of new construction is going through the roof. There's a growing population chasing a finite amount of affordable housing. As a result, America is short around 3.2 million homes, and there's no end in sight. This means that rents will continue to increase for the foreseeable future once we get out of the oversupply phase. So because we're in oversupply, there's oversupply happening, rents are calming down. But meanwhile, the markets are calming down, inflation is coming down, and interest rates have stabilized and are predicted to ease in the coming years. We're towards the bottom of the market. Look at these cap rate projections. They're projected to go down, but they're really high right now, which means prices are projected to go up. This is because of stabilizing financial markets I just talked about. So I hope this video helped you get off the sidelines and start taking some action. Instead of listening to the news and what everyone else is saying, you're going to be different. You're looking for some deals to invest in. If not, start. If you're too busy to invest in real estate, you can always invest passively in other people's deals. People are out there doing them like us. If you want to learn more about investing with us, head to nighthawkequity.com/intro and book a call, or just go to nighthawkequity.com and click the book a call button. We'd love to learn more about you and your goals and see if what we offer is a good fit. Thanks so much for your time. Can't wait to talk to you.